afternoon, everybody. Welcome to your Tuesday edition of TraderMerlin Show. It's going to be a short one today. As I told you, I have a call at in 30 minutes, so I kind of have a hard stop at 30 minutes. But I thought, you know what? We got some interesting data coming out with retail sales numbers. And, of course, they expected retail sales to contract, but not as much as it did. So we'll talk about that on today's show. Good to have you with us. Those that decided to join early. Kutut down in Indonesia. Good to have you with us. Lori, Siraj, what's up? Got Tom, a regular, Thomasina, Kenny, Zach, Koja, and Les starting things off with the greetings from Cape Canaveral. Greetings from Southern California today. This is my show topic, and I will keep it pretty quick to focus on these numbers. But then as we progress, we'll dive into some other topics along the way, which I'm hopefully... Oh, don't tell me I closed this out. You've got to be kidding me. Sometimes I amaze myself. It's the stupid things that I do. Oh, no, there it is. Okay. So, I want to start off with this table right here. So, first off, let me bring up the retail sales numbers. And, of course, you can go to the different government agencies. This is all readily available information. But wanted just to... show you these numbers because they weren't that great. It was only a slide of 1%. Now, the previous month was positive. They expected to contract to negative 0.2%. We came out at negative 1%. So what I did is I went through and I outlined the things that just dropped month over month. And while it's not a big mess, you can see retail and food services taking out gasoline slightly dropped, but I'm going to call that pretty much unchanged. Yeah, big get my Nightfather to show up. The more noticeable ones were down here, motor vehicles and parts. I thought this is kind of interesting because we've been hearing so much, and I had to experience it firsthand, the crazy dealer prices for vehicles, new and used. So that started to come down, which is probably a good thing. As John O'Donnell will say all the time, the price for a high price is a high price. And at a certain point, people just go, you know what, not paying that. That's going to have to come down. So it's kind of funny. I actually was doing the same thing with these e-bikes. I told you I bought 5 e-bikes from China. I absolutely love these things. They're awesome. And I was like, you know what, maybe I'm going to buy some more. The price has already gone up about 15% since I ordered 4 months ago. And I just tried to buy them in bulk. It's like, what if I buy 170, a full shipping container? She's like, prices, $900 a piece now plus. I said, you know what, that's just too much, and I know what'll happen. I'll wait a few months, and things will drop back down, which I think will happen with the automotive industry. So autos are obviously a bad piece of this. You look down a little bit further, building materials, and I think that's rather interesting. We looked at lumber recently, which I got a nice comment from one of the viewers saying, you know, the lumber thing was really just shut down of factories in Canada, which makes a ton of sense, obviously. COVID shutting down a lot of plants, and as they come back online, all of a sudden, things are right back to where they used to be. But seeing the drop in building materials, especially during the summer, I thought that was rather interesting because you would make the assumption, I don't know if that's a good thing or not, because we know what assuming does, makes an ass of you and me, they say, make the assumption that retailers would benefit with regards to building materials during the summer because, hey, we're taking some time during summer to build on, expand, etc. What else was missing? Healthcare was slightly down. You had a slight drop in sporting goods and instruments in bookstores. Yeah, no one's reading anyway. And then finally down here, non-store retailers, so electric shopping, mobile houses. I don't know what that last category is, but it wasn't that bad. Now, the reason I bring this up is because we have so many companies reporting earnings this week in the retail space. Of course, I'll run through the numbers here in just a second to look at things like Walmart reported earnings today. You had Home Depot as well. Now, I see the grief in the audience out there. Kenny saying, feeling the pain on my HD calls today. Going in on calls prior to earnings, man, it's a gamble. It's a dangerous thing to do. Now, Walmart had earnings. They beat by a good number, and they were just barely up. Home Depot beat by a decent number. They were down 4% on the day. You also had Grubhub, which is supposed to report earnings. I don't have those numbers out yet. Coming up tomorrow in the retail space, you've got Target, you've got Lowe's, TJ Maxx and Company. Those are some of the big retail ones. What else do we have? I'm just reading through my list here. You've got Macy's, Kohl's, Ross Stores, Estee Lauder. That's going to be reporting on Thursday, and then Friday I know you have the Buckle reporting earnings and Foot Locker. So a ton of major earnings announcements coming out this week, and sometimes it's nice to line up where do we see the shortfalls, which companies are suffering if there is in fact a contraction, and might that pass through to specific companies. For example, Home Depot, they did beat earnings, but the price was down almost 4%. Why? Well, maybe that has to do something with the contraction in the retail sales in the building space. So that's good. Can you post a link for those bikes? It's Alibaba. It's Alibaba, Echo. The bike is called VTUVIA, Vituvia. But you'll see they're going for like $1,400-$1,500. But you buy them in bulk, you can usually get them a bit cheaper than that. So, that has me wondering about what's going on with these overall markets, because today you saw a nice big knee-jerk reaction from the equity markets to the south side. The big down index here was the Russell 2000. But again, like we talked about with Mr. McCormick, we're really not that bad. I mean, it's still within that range. And I agree with him 100%. We didn't corroborate or anything on this Russell 2000 chart. You guys know I've had this yellow box on here for quite some time. And my number was exactly in line with his. Anything below 2,087, then we start to get concerned that it's outside that range. And it doesn't mean the whole market's going to come crashing down, but there's a lot of people who I think have an interest in keeping it above that 2,087 on the Russell 2000, which was down 1.27% today. Dow was down almost 1%. You can see, really doesn't matter, does it? It looks like nothing on this grand scheme of things chart, but in fact it was down 0.9% today to 35,213. NASDAQ 100 down a little bit over 1% as well. You're looking at a 1.09% slide. Stumble at ramble on today's show. I'll ramble all day long. I'm good at rambling. I love to do it. This one's a little bit more concerning. So when you look at these three indexes, check out the S&P, great, strong. Look at the Dow, great, strong. Look at the Russell, sideways, really nothing. This is honestly, from a trading perspective, probably the best chart on here because it's just range bound. It's just, play the highs, play the lows, call it a day. But look what's going on right now with the NASDAQ. I'm gonna, I'm gonna do it. We're just gonna break down and we're gonna draw a yellow box on this bad boy. Why? Because it just feels like it's starting to traverse sideways. Now the question is, where is the bottom of this little box, right? You guys can see I'm going from the peaks here, which I'll have to modify just a little bit to right about there. Ooh, gosh, getting these tails out of the way. Do you go into here? That's probably where I'd feel comfortable drawing that box. I know it cuts out some of those little bottoming tails there, but we got that situation where for a better part of a month, NASDAQ's just going sideways. Really nothing noteworthy to talk about with regards to the NASDAQ. Now, remember, the longer that this happens, the more likely we're going to start to see the NASDAQ break down a little bit. And maybe that's a rotation out of the mega cap tech stocks, which have been such a great catalyst for the market. But right now, it seems like something else is driving it, and we're getting sideways action out of the tech space. So that's of interest for me, especially like with Scott McCormick yesterday, looking at the Beck report, bonds, equities, currencies, and commodities, and seeing how all those things lined up. Today, one thing I was taking a peek at was the Australian dollar. Was not a pretty thing today, and I'll look at here. I'll even just show you. Boom! Look at today's trading on the Aussie dollar. We were really just bouncing along this line and just ripped down. Aggressive down day for the Australian dollar. Now we're coming back up a little bit in the after-hours session. Why is the dollar climbing higher? Let's bring up the Dixie. For me, it goes back to this overall pattern, right? If we talked about this the other day with the dollar index and where it looks like it's actually found a footing. And I know it seems strange to say it's a footing, but notice that it bottomed out in January 6th of 2021. It made a bottom, but nowhere somewhat near the previous bottom, right? And that bottomed out again on the 21st. But we're making slightly higher lows. Now, we haven't been able to breach this high at around, call it 93.50, but it looks to me like it's just getting stronger and stronger. Now, why would the dollar be getting stronger? Well, part of that is, I believe you're seeing, I can go over here and I'll show you. If you look on the 10-year, you're seeing interest rates fall. So as interest rates fall, the dollar gets less desirable as a carry trade, right? So all of a sudden, it starts to not be as appealing to be actually it's better as a carry trade. So they're holding dollars and keeping the yield. You're getting a lower yield on your money. So the printing side of it, you would think would be an impact from tapering, right? So if they talk about slowing, and I think that's really what the talk track is going to start to shift here, because we have the unemployment numbers kind of where they feel comfortable with it. We see a lot of the economic data looking good, and the rising talk track of inflation, even though they say transient, that means that the Fed might have to raise rates. And if they do raise rates, that should bring more money into the dollar, and I think right now it's based off of expectations. I know. I don't think it's going to happen in September. I'm definitely not in the moron category, Brendan, but I don't think it's going to happen in September. Brendan says, some morons think the Fed is going to taper in September. I don't think so. I really don't think it's going to happen this year. It just doesn't make sense to kill that whole Santa Claus rally, but I agree with Brendan. They're trying to confuse people. But it would not surprise me to see it happen in the first quarter of next year, of 2022. Now, again, the economic data is starting to look a little bit worse and worse, but if inflation doesn't get back under control, then they will have to raise rates, and that could just send it in a tailspin. Again, I would not want to be in that in Powell's situation, because those are some hard decisions that I certainly don't want to be making. But the dollar index been looking stronger, and if I just go based off of the trend and what price has been doing over the past couple of months, I actually like it. I just really think it needs to get above this 93.50 mark, and then of course you have the 94. Now you'll notice that if we do get above 94, I'll move some lines up here a second. If we get above this point right here, 94.70, then all of a sudden it seems like you have a real strong move up, like potentially a very strong move up, which I'm a little bit optimistic actually if it keeps building strength like this. And of course, if the Fed does any tapering, you'll see that dollar spike. But remember, as Scott McCormick pointed out on yesterday's show, when you're taking on more debt than you've ever had in the history of the United States of America, it's not good to have a strong dollar. You want a weak dollar so you can be paying back that debt with weak dollars. So, yes, Brendan says stagflation could just become shrinkflation. Yeah, that needs to be more popular, the term shrinkflation. It is absolutely real. All right, so let me keep running through our overall markets here, as I only have a few minutes to keep going here. Tom says transient means I think all the inflation we already experienced will stick and it will be compounded at normal rates, I think. Well, transient means that, yes, what they mean by transient is they know it's higher than their expectations, right? So they expect it to be 2 to 2.5, maybe 3%. Well, we're at what, 4.5, maybe 5%. If you believe the data, I think it's higher than that personally. What they're saying is transient means it's going to move away from that moving average, if you will. Like price is going to extend above it, but then it's going to come back down and go back to a normal level. But the question I have is, how long will it go above that norm, right? When we say it's higher than normal and higher than expectations, which is what Powell addressed at the last meeting, how far and how long, right? If we get to the point that all of a sudden it's transient, but we get to inflation of 10%, now you have a problem. Even though it may come back at some point to normal, it's going to rock that boat so much that the boat might tip over. And to me, that's just a problem that I don't really want to see. I mean, obviously, it's going to create some volatility in the market, which I love. I prefer to have volatile markets and big moves up and down. But I think the average retail investor probably doesn't want to see their portfolios take a big hit if all of a sudden the Fed loses control of the markets. But remember, they have unlimited pockets. They can pretty much steer the ship any way they want. Noam says, I pray we don't default on our bonds. I don't think you need to pray on that, Noam. Don't worry about praying. Pray for other things that are more important, because it's not going to happen. I don't see that happening. Certainly, it would be a great way for us to get out of the current situation that we're in. But remember, we're a borrowing country. We borrow as governments and as citizens. We borrow. It's what we do. So if all of a sudden our credit defaults, our credit worthiness dissipates, then nobody in the world is going to want to do business with us. They cannot let that happen. So they will just keep on printing money to pay off these debts, which of course pays it back with weaker dollars. They will not default. That would probably be one of the worst things that could ever happen. Brendan, that's a funny one. He says, pray for our freedom. Yeah, might need to do that too. That's probably one we have more of a fight in there. But the default, not going to happen. Unless it's something orchestrated that the government says, you know what, let's just erase all our debt right now and start from scratch. But I don't think that would happen. I think it's just way too crazy of an idea. All right, let's go to some of the other things out there. We talked about gold the other day with Scott McCormick. You know, it's been rallying up, but it's just not. I mean, we've really got to get above that 1840 mark for me to get real happy about gold. That big drop down did not help me. It stopped me out of one position, but allowed me to get into another one. So I'm okay with that one. Unfortunately, my current position is much smaller than the one I had before, but it's all right. We've offset those losses, so we're okay with that. So trajectory, though, what's going to happen here with gold? You know, it's still, to me, teeters on the inflation discussion. I see inflation being an issue, but then again, I can make arguments for both sides of it. It's a beauty of kind of the way the markets work. It's almost like being a lawyer. You can argue for or against. I was told that actually in law school, what they'll do is they'll take a couple of students and they say, okay, you're going to be the defendant. You're going to represent the defendant, and then the next day they make them the plaintiff. to defend the plaintiff on that one, just so you can argue both sides of the equation. And I think any good trader can argue both sides and see merits for a bullish gold here and a bearish gold. Right now, it feels as if it's fallen out of favor a little bit. But if we get below that 1673 mark, then I'm really bearish on it, but I'm actually bullish on it right now until 1840. And then oops, I don't even have my chart up. 1840, and then I'll reevaluate here and see what my thoughts are when we get to 1840 on gold. I'll probably close it just to be safe, and I'll be happy getting my losses back on that one. And silver was also noteworthy. I do have the 22 SLV puts, right? I sold a whole bunch of SLV puts, which is going to be interesting because my options expire on Friday, and we're getting right down near the end of it. All in all, I'm actually still okay with silver. If you notice this horizontal line here, yes, it just bounced off the bottom. I'd actually be okay to buy some more silver at that $22 mark on the futures, but as you can see here, SLV now currently below 22. It's at 21.92 in the post market, which means if it closes like that on Friday, I will be put all those shares, and I have quite a few that I sold on SLV expiring at the end of this month. Actually, at the end of this week. And lastly, we got crude oil. And no, I'm not going to go into talks on Afghanistan. That's above my pay grade. Crude oil. We're coming back down for a third attempt at this lower line at 65 bucks. Right now, really since July 1st, crude oil just is not showing the strength that it had before, right? And I've pointed my fingers at a few things as to why I believe that this is going to continue to drift down. I do think you'll see it go from 66.58, which is what it's at right now. I do think you'll see it hit 65. And from there, we might get one last little bounce. If we don't make a high from there, a new high based off this downward trend, then I think you're going to end up breaking 65 and probably drop fairly quickly down to like 61.50 and change, somewhere in that ballpark. But not optimistic on crude oil right now. It looks like that run might be done for a little while. Remember, we got increased supply, potentially lower demand because of looming lockdowns going on, and who knows what state's going to get shut down. We'll probably be first out here in California, but it's not looking that pretty right now. So that's kind of your top 7. And what I didn't get to is you're seeing a nice little pullback here in some of the cryptocurrencies for us. There's one more I need to add on here. Let's go to probably the best performer and the amazing one over the last couple of days, SOL USD. There you go. I'm going to go to Solana, add that to the list, and look at what happened with Solana. I mean, this has just been absolutely beautiful. I picked the right time to buy. My entry on this was 28 bucks about a month ago, and hit 76 bucks today, and has since come down to about 64. But all-time highs looking real strong. There are a few darlings out there in that crypto space. Bitcoin down 2.2% on the day. Not the best, but it's okay. I'm all right having a 10-15% up move followed by a 2% correction. That's fine. Ethereum down 3.4. Again, notice all of them have a huge run, and now it feels like consolidation near the top. All right, even Ripple having a pretty big pullback. Almost all of these having significant pullbacks right now. The one that I'm still potentially looking to add to it would be some Polkadot here. The staking rates are just too darn good. And I actually spent a good portion of today reshuffling my portfolio around 2 different websites. And part of the cryptocurrency program is going to be me. It's a segment I call Chasing Yield. And I have a spreadsheet that has about 18 different exchanges or places that you can park your cryptocurrencies and the rates that they pay you to park your cryptocurrency. It's funny because one exchange will pay you 2% and then the next exchange will pay you 12% and vice versa. It's all over the place. It's crazy. Nice. That's a heck of a good month. Yeah, I mean, Brendan says month over month, my main crypto portfolio is up 79%. It's hard to not have those kind of gains when you look at price moves. I mean, look at Polkadot here. We went from 10 bucks to 27 in a month. I mean, yes, a lot of these are looking real good. It's a question for me anyway of, especially with Bitcoin, do we get back up to that 65? And I believe the answer is yes. It's just a question of when. If this trend does continue and keep showing this stair-stepping higher, then 65,000 could happen rather quickly. And of course, if that happens, Brennan, you won't be worried about a 79% month over month. You'll have even better gains than that. All right. Let's see. Let me see what do we got here. I'm not going down the vaccination discussion. Now let me ask, would weaken the dollar? What were we referencing there? Sorry, I got drifted off topic, and sometimes I just go, and I didn't see that when you asked about the dollar. But let me go to the dollar index here. Look at that Aussie dollar today. They're coming right down into this last area of demand. And it's funny because if you look at the Aussie, there's this little area of demand right around 72.20, which we're very close to. After that, I think all of a sudden you're looking at 70. I mean, that's a 250 pip drop in the Aussie dollar here if it does get below that most recent demand zone. So actually feeling pretty bearish on this Aussie dollar right now. I know somebody was asking about the British pound, but it doesn't have the technicals I think that Aussie dollar did. The euro, kind of the same thing, although you're right at that lower level. We talked about 117. It's actually a listener question from a month or so ago was asking about 117 and said, sure, take a stab at it, but look at that picture. It's getting lower highs, lower lows, lower highs, or actually lower highs, same lows. This is essentially a giant head and shoulders right now, or you could argue that it's a descending triangle, just looking weaker and weaker to me. All right, what else do I got here? Questions coming through. Used to be skeptical. I used to be a crypto skeptical paranoia dude. F the banks. Gold on a Bitcoin. Well, I think it's about mixing up the portfolio, and to me, that's the most important part. I think I have different thoughts on different cryptocurrencies, and for example, someone like Brendan does. But bottom line is diversification is really critical for your crypto portfolio because you just don't know which ones are going to hit. I did a video a while back called How to Invest $10,000 in Crypto, and part of it's in the big stuff, your Bitcoins, your Ethereums, and Litecoin if you want. But then you look at some other ones like, Solana. Remember, you guys, was it IOTEX, Brendan? There was one I mentioned called like IOTEX. Let's see if I can bring this one up for you. And it has just gone huge since we talked about that in the show. And I said that's your flyer. That's kind of a gamble when you put in your portfolio. And again, this is why I want to mix things up. IOTX. Yeah, IOTEX. Talked about that in that show. Down 12% today alone, but look at the price chart of it. And, just in a couple days, it went from just under 2 cents to, what did that hit? Over a dime. So you had a 5x rate of return in a period of 3 days on this thing. Crazy, just crazy. I hope you bought some of that one, Brandon. I think you were talking about that one. All right, what else do I got? Yes, exactly, right? You got to spread the bets. And I have a couple high flyers. I have a couple ones I think are crazy, and who knows how they're going to turn out. But, yeah, don't put all your eggs into Bitcoin. And if you do put your eggs in one specific cryptocurrency, shop around and see where you can earn an extra yield. BlockFi used to be the place to go, but all of a sudden they keep cutting how much they're paying. Started off at 7, then it was 6, then it was 5%. Now it's 5% up to 1/4 of a Bitcoin. Really? Now you're putting limits on it? After that, it's like 0.2%. So you don't make much at BlockFi. So you move it to other places, chasing yield. If it means me moving something that's making 1% to some place where it's making 6%, I'm moving it. That's a huge savings for me and earnings potential over the course of a year. All right, Tom says, just had an alert on Apple fire up. It broke through supply distal. I set this during Sean Reed's session. How does it look to you before I'm over its long term? Let me see. See if I can get after hours since TradeStation is just an absolute mess with me. Okay, let me bring the chart up for you guys. So here is Apple. Boo, hiss, I hate Apple. And we'll go to your 24-hour market. I don't see it doing anything really that special. Fire broke through a supply. Either I'm missing something, Tom, or I don't see Apple really doing anything here in the after hours. It looks like it's just dropping down. I don't know if you're talking after hours or not. How does it look to you for the longer term call? Well, let's go to the daily then, because I don't see it in the after hours. Oh, I think maybe you're talking about just the all-time high. It's interesting when you look at this price chart of Apple. This is, again, one of those patterns that a lot of people love, and I'm a fan of it. It's called a pennant or a symmetrical triangle, and it looks like this. You got your top gets slightly lower. We could almost just draw this right through here, and then you have your lows getting slightly higher, and ultimately what you're looking for is the breakout above it, and the distance for a lot of people will be this measuring object straight down to the base right there, which means your potential target on this break for Apple would be, let me get you the number, Tom. You're looking right around 155. 155.60 would be the target based off this breakout. Now, you know, you are at all-time highs here. You did rip through it. I mean, obviously, you got to go with the trend as your friend and feel like jumping it. I just have, you guys know me, I have a real hard time buying all-time highs. It's just a real challenge for me. I've been burned too many times on it. So I personally would say no. Maybe buying the breakout, but now I feel like you're chasing that pop a little bit. And given the way that these markets reacted today, I'm not overly confident on it as a long-term thing. I am in the believe like clause, Schwab. Said you own nothing and be very proud. Virtual signaling. Okay. Wow. All right. Ooh, good one, Kenny. I do an SS digs today. Oh, poor Sammy. Oh man, that guy's losing subscribers to his service faster than, well, I don't even. Let's not be mean. Let's be nice. Okay. Is this what you're talking about? This zoomed out, right? Tom, you're saying that picture there. I mean, it obviously looks great. It looks great. I just have a challenge personally of buying something that is just ripped through an all-time high. I like the breakout of the pattern, but I would have been out already. I would have made a smaller trade. I can go to trailing stop. Yes, absolutely. Go with that trailing stop. I think that will definitely be a good one. Yep. All right, I got 3 minutes. Let me go into this here. I want to show you a couple things. This is what we had happen today. There's your retail sales. Previously was a gain of 0.7%. And then you look at the retail sales number, came out at negative 1.1%. So serious about face. Other than that, there wasn't too much that was jaw-dropping. You do have a bunch of announcements happening later for the British pound, which can be CPI, PPR, HPI, and RPI. So I got all 4 of those in there. Now, earnings-wise, here's the earnings I was talking about. Walmart and Home Depot both beat earnings, but they didn't really do much with regards to price gains. Down 4% for Home Depot. You had Agilent and CliK also beat earnings, and they got beat up too. Agilent was up 1.2%, but CliK was down 4%. Tomorrow, here is your, oops, I don't have it boxed out. One that I'm really kind of curious on is this mortgage delinquencies. I'm kind of curious to see if we see a rise, as everything is so robust and money just seems to be doing so well. I would really like to see these mortgage delinquencies numbers start to increase. That would make me feel optimistic about more downside movement in the equity markets. Because if we start having mortgage problems as this market is super robust and everybody's got money, then if we start to contract our money supply a little bit, these guys are going to get screwed and this thing's going to spike up, and that means more sell-off in housing, and of course that means more market correction. So bring it on. Crude oil inventory is coming out tomorrow. That's obviously important given what's been going on with crude oil, again down 1% today. You have unemployment numbers for Australia tomorrow, but that shouldn't be that huge of a deal, even though we saw a big drop today in the Aussie. And then earnings for tomorrow. As I mentioned, Nvidia, Cisco, Target, Lowe's, and TJ Maxx, all big retailers coming out this week, and there's some nice ones tomorrow. Now, Target, obviously, in that Walmart space. Remember, Walmart beat earnings and just barely eked out gains today. Let's see what happens with Target. That's going to be before market open. All right, Merlin. Yes, I did hear about that. I was actually thinking of doing something on more specifically on that one, but maybe I'll do that for another day when I got some more time to dive deeper into these, because I have to run to a meeting and I'm going to keep things right on time. Cool. All right, guys, I apologize for doing a shorter meeting, but unfortunately I am just getting brought into more and more meetings. As you know, the crypto program will be rolled out starting next week, which I'm pretty excited about for OTA. It should be, is it next week? What's the date? Yeah, it's going to be next Tuesday with my Crypto Investor Live program. That's going to start on Tuesdays and Thursdays. Tuesdays will be from 6 to 8 p.m. Pacific time, and 9 to 11 a.m. on Tuesday Pacific time. That'll be the new one. So pretty excited about that. Kind of a whole new avenue for me, really kind of focusing specifically on crypto for Online Trading Academy. So that'll be pretty exciting. Of course, for those of you who are Online Trading Academy graduates, we'll be talking about some of that in the Elevate sessions that are going to be happening this weekend, etc. So anyway, thank you guys so much. I have to run. Hope you guys had a good show. Sorry to make it short, but we'll be back tomorrow with a full-length show. Until then, happy trading, everybody. I will see you all mañana. Take care.